You're in the Business Insurance Zone with me, Steve Savant, national financial columnist and color commentator. This week on The Biz, our monthly update series for January 2013. And on today's show, our life insurance update with special guest Jessica Lopez, recognized siren of the Spreadsheets, all here on The Biz.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, Happy New Year, everyone, and welcome to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And we're heading into our third year of broadcasting, and with me today, the Excel queen herself, the gal of the grids, the siren of the spreadsheets, Jessica Lopez.
Hey, Steve, great to be here again.
Happy New Year to you, and
Thank
did you have a good holiday?
I had a fantastic holiday. It was relaxing, and 3 years you just mentioned. It's hard
We're
to
heading
believe
into
that
our
it's been
third
that
year.
long.
I know, it blows my mind. We have over 600 shows out there on the internet. And I have to say, and I just want to say thank you all, everybody that's viewing. And the real surprise to our viewership is that we're picking up about 18 to 19% consumers watching this show.
It's amazing.
It is amazing. You should see the questions I get, and I go, this can't be an agent.
Right.
This can't be a producer.
Right. Well, consumers are hungry for this information.
They are. By the way, you just made up a great point. We had a case. Do you remember that case that came in last year, somewhere in the fourth quarter? And it turned out to be, I think it was like, I want to say, correct me if I'm wrong, it was like a $20,000 income scenario a year. And that came from a consumer. And the reason the consumer wrote us was because we were the only ones on the internet saying you could, because of policy expenses, lose money in an indexed.
Right.
We're the only ones saying it.
Yeah.
And I thought everybody knew that, but it turned out to be quite informational. And that's what we want to do on the show. By the way, before we get going, I wrote a blog, and it's out there already if you want to see it. It's on several of our sites. I noticed in my blog here, I was talking about AG 38. Finally, it's over. I am so glad it's over. I mean, I got to tell you, and there's been a huge reconfiguration of the GUL market. We're going to get to that in the second half.
Yes.
But knowing this has already occurred, and now we're pricing for it right, and now we're reserving for it right, now any uptick in interest rates, any uptick in interest rates is going to be unbelievable for our business. But I don't really see it happening. Most experts say we're going to still stay flat through maybe 2015. I hope that's not true, but think about that. Since we've already fixed this issue now, but boy, the players have changed, but we'll get to that in a second. Jesse, I'm looking at, and I mean, this is almost all AG 38. I mean, everything you have to talk about today. Let's just go through it. There's so much, and again, if you want any of the specific carriers we're talking about, feel free to go ahead and say, Steve, I want that specific carrier and order it at thebiz@brokersalliance.com. We'll send it to you. But let's just go through the main changes of the major players.
Oh, absolutely. Okay. And with the new year come a lot of new changes, product updates like crazy. So first off, we have Transamerica with the new Trans A Survivor now available. With AVIVA, they have the sale of AVIVA USA to Athene.
Yeah, by the way, if you did not catch our show Monday, I'm still in shock. And you know what my email is coming in on this? Who's Athene?
Right.
I mean, you remember, these guys are actually subsidiaries of Apollo. And Athene bought RBC, they bought Prudential, now they bought the AVIVA annuity block.
Sounds like they're on a mission.
They are on a mission. Listen, our industry is contracting right now. There's no doubt about that. And things are changing, and you're going to see more of this. The Guggenheims of the world are buying different people. And I'm just in shock, though, because most people say, Steve, this no-name company, well, actually, they're big.
Right.
And bigger than that is their big mother holding company, Apollo. So it's really huge.
Now, also with AVIVA, they have an additional change to their no-lapse guarantee product line. Jumping to American General, they have a new Extend IUL term conversion product, and term compensation changes effective coming January 14th.
Yeah, I just want to mention, you know, so a lot of these carriers, and AG is just one of them, they give you some real big perks. If you want to convert to their IUL product, this is a possibility that you may want to look at, especially at the front end, because generally, not always, but generally, we'll get in this to tomorrow, generally the first quarter, everybody settles back in their underwriting protocols.
Right.
And, you know, people aren't as benevolent as they were in the fourth quarter, and believe you me, they were benevolent. Competition was fierce. We'll get that tomorrow. But I just wanted to let you know that the AG is one of the big companies that have these conversion programs with other possible carriers involved. So it's kind of good to look at.
Absolutely. Another update we have is for AXA. There are changes to crediting rates on UL, Index Universal Life, and VUL effective this coming February 1st.
Yeah.
ING
and
retention.
it's down.
Right.
Just in case you didn't get.
ING retention change effective January 1st.
That also went down a little bit.
Lincoln National upcoming product adjustments, we will let you know as soon as we have more information on that. And Lincoln Benefit Life portfolio crediting rates changing for Q1 2013.
Yeah, things are really in flux right now. Even though the AG is settled, what isn't settled is the crediting rate. I think everybody's waiting for the cliff. Now that we got the cliff thing over, well, at least, well, let me just say, a 60-day patch job, I think people will settle down to what kind of numbers. Yeah, I'm hoping. I have my fingers crossed.
All right, also we have Principal, Repricer Protector 4 and SUL Protector 2.
And by the way, they're kind of shocking in this regard because they were actually players in second to die, GUL kind of idea, in underwriting. That was kind of a surprise to me.
Right. Now, Prudential changes to their retention limits as well as illustration changes for Pru-Life UL and Survivor Protector. We also have, through Protective Life, the new Universal Life products. Minnesota Life premium deposit account rate changes. Do you know a little bit more about that?
Well, I don't know about the premium deposit for Minnesota Life. I'll have to look that up, but I do know about Protective Life. On our GUL grids now, they've all of a sudden slipped into the players zone, and so I'm going to be looking at that really well. Remember, they use 2 manuals in the underwriting. They may be my dark horse for the first quarter.
Yes, absolutely. Now, New York Life, they are making changes to their whole life pricing changes. Transamerica, their new TransAce 2013 Guaranteed UL is now available. United of Omaha, non-illustrated Universal Life products.
Yeah, when you look at what's going on right now in the market, surprises like Protective, I'm sorry, it is a surprise to me. Trans starting to play again, and then when I'm looking at Protective coming up into the ranks, and we're going to get into this on the second half. We'll talk about here are the players, here are the pretenders. There is so much going on in our business now. Now that we got AG 38 settled, now we're looking, the dust is settled. We have the Excel spreadsheets. Again, we put this thing together so that you can kind of get a handle on it. We're going to be giving it away free all this week because you need to kind of see who the players and pretenders are and all the people who dropped out. When we come back from the break, we're going to address the impact on AG 38 on the 2013 updated Guaranteed UL spreadsheets. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
You know, living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Jessica Lopez. And remember, you can order today's giveaway at thebiz@brokersalliance.com. What are we giving away? The new AG 38 2013 GUL spreadsheet. And just a heads up, before moving forward with any of the ideas, anytime you hear what we're talking about on this show, always consult your tax advisor if we're talking about taxes, and we might mention it here and there. And especially if you're FINRA licensed, always check in with your broker-dealer compliance officer before using anything we talk about on this show. We're addressing the impact of AG 38 on 2013 updated Guaranteed UL spreadsheets. And I mean, it has been an impact. But before we get to that, Jesse, I noticed that you had a little crystal ball procrastination.
I wish I had a crystal ball, but pretty close anyway. And
well, you have some things you want me to talk about.
Right. There's some things that I know that you've been doing your homework on. You've been writing things about these topics. Exactly. And there's 5 things that we are really going to expect here in 2013. Now, as we all know, and what we've been talking about for quite a while now, it's the life insurance industry in 2013 will be in a big state of transition. So there are just some things that I would like for you to touch on that I know are going to be extremely important for our viewers, such as the tax-favored status of life insurance products.
Well, we're not finished. We kind of did a patch job on the fiscal cliff, and yes, there was talk about taking the tax advantages away from insurance and annuity products, but that hasn't gone anywhere. And I think I've been hearing that siren song for 30 years of my career. I don't really see that happening, but because the affluent tax bracket has went up, you're going to see a lot more people look at life insurance and annuities as tax plays, not so much investment plays, but really the higher the client. I mean, look at married couple, 450 now is the new threshold definition of wealthy. That could be a major league player for tax advantage for life insurance and annuity products.
Absolutely. Now, carriers are also evolving to respond to the changing consumer.
Well, finally, we have people allowing us to play on Facebook, Twitter. You know, I mean, we've been doing it for a little while.
Uncharted territory.
It is. And all of a sudden, we've seen carriers actually produce videos that are consumer-oriented so they can speak to the consumer. And I think a company like Metropolitan is a perfect example of this, MetLife, because look, they started partnering with Walmart, right? They got to start doing something. They're already talking directly to the consumer. Right. So you're going to see more of this in 2013.
Now, what would you say the remaining relevant topics are?
Well, here's the thing. Can a carrier even stay relevant today? Because they keep telling me their target market is not only the baby boomers, but Gen X, Gen Y, and the millennials. The problem is Gen X and Y and the millennial generations don't talk like I talk. Right? I mean, you're the other generation. We have to become relevant again as an industry. And if you want to go back out into our archives, I think one of the best wordsmiths out there is Maria Umbach. She's a wonderful platform speaker, and in my opinion, the best blogger out there. Blows me out the door. Can't even hold a candle to her. But she really does this kind of relevancy and changes. You should hear the language she talks about that Gen X and Y and millennials use to talk about life insurance. It's unbelievable.
And so much needed.
It is.
Carriers entering into developing markets. What do you have on that, Steve?
Well, we're becoming smaller. The whole global context of the world is so small. Now, traditionally, I would say, oh yes, of course, AIG and other companies have been international all along. But now, regular, what I call domestic carriers now are starting to look across the sea because there's a huge developing middle class and lower middle class market that's looking for life insurance coverage. And I think you're going to start to see what I would call traditional carriers go out and start playing in international markets.
Got it. Okay. And what about carriers who need to keep themselves up to date on international and domestic regulatory issues?
Well, I got to tell you, this is a barn burner issue on me. I got to say, I've noticed, of course, the UK and several other companies, or several other countries now will no longer allow you to make commission on insurance products. It's all gone to fee. Now, I say that our culture is very different. Our society is very different. I think it's going to be a very big stretch for them to impose their kind of thinking. We do not sell insurance and annuity products the same way the UK and other European companies. But it is a shot across our bow. You're going to see more carriers kind of maybe start to go ahead and amortize comp instead of doing the upfront. That's something we're going to keep an eye on.
Absolutely. Now, next we just wanted to touch on the U.S. application activity for individually underwritten life insurance. We noticed that it was down 0.8% in November, year over year, all ages combined.
Well, this is where I get into this thing. The MIB is a great company. I mean, we use them all the time for underwriting and everything else. And they're looking at how the actual industry at large is doing, and I'm sure that their numbers are right. But in the independent marketing organizations, about the top 20% of the 832 players across the United States actually did flat or better. So when I see statistics like this, is that everybody, like a lot of PC shops sell life insurance, is that fair to put that in there? So if you include it all in, I'm sure MIB is correct, but I don't really look at that as the major player.
Got it. Makes perfect sense.
Now, when I'm talking about grids, again, I'm only going to tell you that I have it, and then I'm going to give it to you, right? And I'm looking at male. Now, think about this. This is why I'm bringing this up. Male 45, $1 million on my best top preferred rankings. I'm starting to look at carriers, and this is age 90. And here's my gripe about this, and this is why you have to order it.
It's a good gripe.
It's a good gripe. Everybody's GUL spreadsheets now have 10-year level, 15-year level, 30-year level, out to age 90, out to age 100, out to age 120, and now life of the client in some of the nomenclature we're reading in these contracts. When you look at a GUL spreadsheet, you better be looking at a new column called the guaranteed premium type, because to me, this is, and I wish they would separate this, Jessica, because it would make everybody understand it better, especially for consumers. But they haven't. This is the kind of information that you need to have, not only as a producer, but you need to have it as a consumer. when you see these spreadsheets, go to the column that says guaranteed premium type, and it's going to show you all these dial a death benefit guaranteed durations. And to me, I really think they should separate this out. It's so complex as it is.
Yes.
After AG 38, I thought we would have solved this, but durations and maturity dates, they're all over the board. You can pick up this and watch all our shows, of course, on our red on-demand video button right on our homepage at brokersalliance.com. Well, that's the Buzz on the Biz for today. Get in the zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.